Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, September 15th, 2009. Well, folks, as we get into the midday session, you see the market slowly floating higher again. Interestingly enough, the down move early came on heavy volume, and we can see the markets, which gapped up slightly today, selling hard on the first hour or so of the day, ultimately on extensive heavy volume candles. And then look at this. No sooner had the heavy volume been disintegrated into that 10:30, 10 o'clock time frame, then all of a sudden the volume just dies out. Look at this. Almost no volume down here, and you just slowly start to float back higher. Very, very interesting in this market as this continues to be the case, where whenever there's light volume, whenever the dollar is weak, you can see the markets float higher. And I want to just show you a couple things. We can show the dollar here chart. I want to show you the UUP chart. Take a look at this. Early in the day, over the first hour, half an hour of the day, the dollar actually upticks, and that's where we see the heavy selling. Since then, take a look at what the dollar has done. The dollar has come all the way back down. As the dollar falls, the markets move higher, and it's just been that simple, folks. This market is pure and simple based on the dollar right now, and that continues to be the way it is. So again, regardless of whatever you think, it doesn't matter the retail sales today, wholesale inventories, PPI, as you can see from this chart right before your eyes, it's clear and simple, a dollar trade. And that's what we've been continuing to say to our premium guys, whether regardless of what the market does, up or down, it's only based off of the dollar as it seems. So again, as you can see, the market falling back down, the market is inching higher. We'll go back to that chart. Look at this gentle move higher, all right? Just a continued upward climb. The volume has been minuscule since the dollar has started to fall in the middle portions of the day. Volume over the course of the day is probably going to be about average because of this first little bit of volume in the beginning of the day. But since then, again, look at how this candle right here just cuts the last one in half, and then it just goes down from there, and that's really what you're seeing. So we'll continue to watch how this plays out, but nonetheless, it without a doubt continues to be a dollar trade. Now, with the dollar, why is the dollar so important? Well, part of it is the fact that a lower dollar rate or a lower dollar is going to affect companies' foreign sales. So obviously, IBM, stocks that sell lots of their stuff outside of the United States, when they switch those currencies back into dollars, they're going to get more dollars from it, so it has a tendency to help earnings. The other side of the coin is the USO, the oil trade. Look at this oil trade. Ever since the lows put in here right around 11:30, look at this oil trade. Has just continued to climb as the dollar's fallen. Because remember, oil is traded in terms of dollars. Therefore, when the dollar declines to keep the same general value, oil has to increase in price. So you're seeing oil catch a nice little bid after falling all the way back to the negative side here. It is catching a nice little bid to the upside. And you can see oil just continuing to move forward. Now, what you're going to look for, in my opinion, is this point right here on the USO. That's going to be good resistance, and you're talking at $36.55 right there. You will have some good resistance on this USO. In addition, take a look at the GLD, guys. Same thing with the GLD. Nice up move, good consolidation, and up move. Why is this going on? Why is gold moving higher? Because the dollar is moving weaker. Same inverse proportions associated with oil with gold as in terms of dollars. Gold's price has to go up when the dollar comes in a little bit, and you can see that clear as a bell today. So keep an eye on that as that continues to go, folks. We will keep you updated on everything that you need to know in regards to that in the Research Center video tonight. I will give out key levels to watch on this gold trade, on the oil trade, and on the dollar trade. Those of you that are Research Center subscribers obviously know a main level on the dollar that got tagged the last couple days, still holding up today, and that's really what you're looking at. All right, let's go back to the Spiders chart on an intraday basis. You can see this trend line right here. If you connect the high pivot from last Friday and just connect it to the high pivot from today, you can see we're piercing that level. There should be a little minor resistance right at that point, but nonetheless, you're going to look to see this market continue up. The next target is going to be 106 on the SPY. You're currently trading at 105.80. Your next target will be 106. That is going to be a very, very significant level to watch in this market, okay? So watch that very closely. You're also going to watch on the 60-minute chart and on the intraday some key levels we mentioned on that intraday video, the nightly video last night, which you have to watch based on a close. Remember, it's all about the close here based on the daily charts and so forth, so you got to be aware of that. Now, on the downside, you're going to have a little bit of support at this trend line right back here in blue, and then ultimately the 20 moving average, which is sitting at 104.40, 105.40. Below that, the 50 moving average at 105.15, and below that, 105. If you get below that, you're going to look at a very, very important level, which will be the double bottom for today at 104.75. That will be the next spot. Notice the resistance level right here, currently working right now. We'll see if it continues to hold up on this market. Now, a couple things to look at. Number one, look at Goldman Sachs. Goldman Sachs, for the most part today, is on the weaker side. It actually was down about $2.50. Right now, only down about 40 cents. But remember, the markets here across the board are positive right now, and you have to keep that in mind. You have the Dow up 49 points, the Nasdaq up about 10.5, and the S&P 500 up about 3.5 on the day. So keep that in mind, folks. Goldman seems to be lagging. Goldman had a huge move, though. If you look at the 60-minute chart on Goldman, look at this move it's had over the last week and a half. It's due for a little bit of a breather, if you ask me, and we'll continue to watch that. JP Morgan is also somewhat on the weaker side, although it has gone positive. It had a huge dump out this morning where it basically dropped $1.50 in a matter of 10, 20, 30 minutes of the day. You can see it just tumbling all the way back down, giving back most of yesterday's gains in a matter of 3 candles. However, since then, and since the market's gone into a little bit of a sideways to up move, continuing all day long now into the afternoon, you see the market on JP Morgan, or the price on JP Morgan, just slowly appreciating, and JP Morgan is back to the flat line. ExxonMobil, folks. Exxon is starting to break up, although it is still negative on the day. Why would you think that Exxon would break up right now? And you should be thinking clear and simple. Oil's moving up, therefore Exxon should be catching a bit off of the oil price appreciation, and you can see that starting to happen here over the last couple candles. In fact, I'm surprised Exxon hasn't rallied more. I think it's a fair bet if oil stays up here into the close, you will see Exxon possibly go as high as $70.15, which would be a double top today, even possibly as high as this point here at the 200 moving average, which is right around $70.30, $70.25. So right in that area would not surprise me to see that hit as well. All right, so continue to watch that stuff. This is a very, very important stuff right now that you need to be continuing to watch. There are a couple other outliers here that are outperforming. We can take a look at 3M. 3M is up 12 cents, starting to break higher on the weak dollar as well as commodity prices get a bid. We'll take a look at also a couple of these other ones. Let's take a look at Bank of America. Bank of America, which is just up a penny on the day, is catching a nice little bid here as well. So let's go back to the spiders and take a close look. Spiders continue to push through, or try to push through, that resistance level. As you can see, that is a little bit of resistance, but the big level you're going to watch now is 106, folks. 106 will be the next big spot to watch. After 106, we'll discuss in tonight's video where you're most likely going, especially if you close up here. There's going to be a target that you're going to look for to be tagged, and I think those of you that watched the video last night for our premium guys will know that level right off the top of your heads, but I will go into that in depth tonight as well in our 30-40 minute nightly technical analysis videos, basing it on technicals, psychology, and all the other stuff we talk about. All right, folks, have a wonderful rest of the day. Enjoy, and we'll talk to you later tonight if you join the Research Center. Take care.